Non-forfeiture options. Non-forfeiture options are available to policy owners who lapse or surrender their permanent life insurance policies. 3 standard options. All forms of permanent life insurance have a cash value, which is a non-forfeitable benefit that the policy owner is entitled to if the policy lapses or is surrendered. Permanent life insurance policies have non-forfeiture options that give policy owners several different ways to receive the cash value upon policy lapse or surrender. There are 3 standard non-forfeiture options. Cash surrender option, extended term insurance option, reduced paid-up insurance option, cash surrender option. Under the cash surrender option, the policy is surrendered, and the insurer simply pays the cash value to the policy owner in a lump sum. Key points include: when a policy is surrendered, the policy is canceled and the insurer's responsibility under the terms of the contract ends. Most states allow insurers to delay paying the cash surrender value for up to 6 months, though few companies do this. Surrendered policies cannot be reinstated. Extended term insurance option. Under the extended term insurance option, the cash value provides paid-up term life insurance coverage. Key points include: the term insurance face amount equals the face amount of the surrendered permanent life policy. The coverage period is dependent on the size of the cash value. The larger the cash value, the longer the period. The term coverage is paid up, which means no further premiums are required. Term life policies are not eligible for policy dividends, even if the lapsed permanent life policy was a participating policy. The extended term option is not available if the lapsed policy was issued on a substandard, rated, basis. A lapsed permanent life policy may be reinstated if the extended term option was selected. Automatic option. The extended term insurance option is automatically applied if the owner of a lapsed permanent life policy fails to select a non-forfeiture option. Reduced paid-up insurance option. Under the reduced paid-up insurance, RPU, option, the lapsed policy's cash value is applied as a single premium to buy a paid-up policy of the same type as the lapsed policy. Key points include: the amount of the paid-up policy's death benefit is dependent on the size of the cash value and the insured's age. The larger the cash value, the larger the paid-up policy's face amount will be. The older the insured, the smaller the paid-up policy's face amount will be. The permanent life coverage is paid up, which means no further premiums are required. The paid-up policy will build a cash value. The paid-up policy has the features and options of the lapsed policy. If the lapsed policy was a participating policy, the paid-up policy is eligible for policy dividends. A lapsed permanent life policy may be reinstated if the reduced paid-up option was selected. Example: Louise, age 54, is surrendering a $50,000 whole life insurance policy, which has a $12,000 cash value. If she selects the cash surrender option, she will receive $12,000 from the insurer. There will be no further life insurance protection, and the policy cannot be reinstated. If she selects the extended term non-forfeiture option, she will receive a $50,000 paid-up term life policy. At her age, this coverage will last 14 years. If she wishes, she may be able to reinstate the lapsed policy and resume her permanent life coverage. If Louise elects the reduced paid-up option, she will receive a paid-up whole life policy with a $28,000 face amount and a $4,200 cash value, coverage that will last her entire life. If she wishes, she may be able to reinstate the lapsed policy and resume her permanent life coverage. Non-forfeiture options in UL insurance. Unlike other permanent policies, Universal Life, UL, policies do not offer the 3 standard non-forfeiture options. A policy owner has 2 choices when surrendering a UL policy. Surrender the policy for its cash value. Continue coverage with no further premium payments, in which case coverage will last for as long as the cash value is able to support the policy's monthly mortality and expense charge deductions. For your review, a permanent life insurance policy's cash value is non-forfeitable. All permanent policies include non-forfeiture options that provide ways for the owner to obtain the cash value if a policy is lapsed or surrendered. Permanent life policies, other than UL, offer 3 non-forfeiture options: cash surrender, extended term policy, default option if none is elected, and reduced paid-up policy. UL policies offer 2 non-forfeiture options: cash surrender and continue coverage with no further premiums. Surrendered policies cannot be reinstated. Please pause the audio and watch the video.
This lesson introduces us to life insurance policy options and riders. Now, I believe that the lesson does a pretty good job explaining, what each option, what each rider does. I just want to take a moment to make sure you understand the basic difference between a policy option and a policy rider. Let's begin with policy options. A policy option is simply a choice that the policy owner is given of several different options which have to be selected. In other words, this is not something that's truly optional in the policy. It's just something that the policy owner is entitled to, and they have to choose from several options available to them. The non-forfeiture option is a good example. In a whole life insurance policy, permanent life insurance policy, the cash value is fully non-forfeitable, meaning it's always an asset of the policy owner. And if the policy is surrendered, the cash value is payable to the policy owner. But the insurance company doesn't dictate how that money is going to be given. It gives the policy owner several optional ways to receive that. They can take it as a cash payment, they can elect an extended term option, or they can elect a reduced paid up option. There's a good example of how options work. A policy rider, on the other hand, is a truly optional feature that costs a little extra money, but to the policy owner's viewpoint is worth the extra money because it adds value to the policy. A good example, a good analogy to think of is that of a new car option. You buy a new car, you can buy the standard model right off the lot, but maybe you want the sport package, or maybe you want the heated seats. Maybe AM/FM cassette's not enough. Maybe you want satellite radio. Those are optional features that are going to cost you more, but as the buyer of that new car, it's worth the extra money to get that added benefit thrown in there. That's what a policy rider does. For a little extra money, it adds a lot more value and a lot more power to that basic policy. So if you understand that difference between an option and a rider, that'll help everything else kind of fall into place for you as you prepare for your exam.
Okay, so here is our 4 questions that we get at the end of every lesson. If a permanent life insurance policy lapses and the owner does not select the non-forfeiture option, the insurer will automatically I want to say this one. Suspend coverage until the policy owner either reinstates or surrenders. My second choice, apply the option, but I would think they would need to sign. All right, a policy owner who lapses his whole life insurance policy and applies its cash value to pay up a whole life of coverage has chosen which of the following? Cash surrender. What is the maximum amount of time most states allow insurers to delay paying cash surrender values? 1 month. Might be 6 months. 6 months is my second choice. Okay, Jerry asks his insurance company to pay him the cash value of his permanent life insurance and cancel the policy. Jerry is using which of the following non-forfeiture options? Jerry asks his insurance company to pay him the cash value of life insurance and cancel the policy. I've done this myself, so I should know the answer to this. Alright, so it should be cash surrender option, right? Alright, let's see how I did. I only got 1 right. That sounds about right. Okay, so the first one should be apply the extended term option. This is my 4th lesson in a row, so I'm getting tired now. I can tell by the way I'm answering these questions. Alright. apply the extended term insurance option is what the insurer will do. That was my second choice. If the owner does not select a non-forfeiture option, the insurer will automatically apply the extended term. All right, this one here, policy owner lapses on his life policy and applies the cash value to pay up the coverage. So they chose a reduced paid up option. Okay, not surrendering. Okay, this one is 6 months. Remember I said that was my second choice. What is the maximum amount of time? They got 6 months to pay the cash surrender values. And the last one is cash surrender option, right? When you want to get your money and cancel the policy. This was a short and sweet one. It wasn't too long, wasn't too short, just right. 10 minutes. Because 20 minutes is pretty long for some of these lessons. So the next one we'll go over is policy, loan, and surrender provisions, but I will not be doing any more today because my brain is fried. I got 30% of this class done. I appreciate everybody, so please subscribe if you like these kind of videos. If you're working on a new career, a new hustle, whatever you're doing. I'll see you all in the next video.